Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Technically, I am still on holiday. However, I just couldn't resist covering what took place yesterday. Some of Jerome Powell's comments and really, where we're at as a market. You guys know that we've kept everybody very, very grounded despite a lot of the bullish narrative that's been floating about. This kind of concept of a pivot is really what we spent yesterday's video looking at, and what it actually means, and what a pivot is. A pivot isn't them stopping interest rate hikes. It isn't them doing interest hikes in less of an aggressive manner. A pivot is them actually reversing them, and that is when we become bullish on markets, as we know that, if they start to reverse interest rates, essentially the amount of money that's had to go and pay that interest rate as it is, the reduction in that interest rate, that capital can then flow freely elsewhere. Money doesn't evaporate, it just moves. It's kind of like water. Water's a bad analogy because, of course, water does evaporate, but it doesn't disappear, if that makes sense. It just goes from one place to another. So we're going to talk about it. I really want to just kick things off with some comments from Jerome Powell yesterday, and really just his opening statement, because and really it's a very hard road to walk when everyone's sort of coming out as bullish and telling you, the pivot's here, and there's reasons to expect crypto to explode, and there's going to be an epic rally, and this is the generational bottom. It's quite a hard road to walk, to be the guy that kind of has to come out and say, look, that's not the case. Here are the reasons why not. We've really drilled and focused on this concept of liquidity, and it's something that we're going to continue to do because it's paid us to do so far. We're not interested in catching the perfect bottom and being lucky. We're interested in making money and preserving the capital that we already have, and we've done a good job of that so far, being sat largely in US dollar stablecoins. I understand why people are bullish on the crypto space. You're talking to probably one of the most bullish individuals that there are in regards to crypto. I am a believer in this technology as a technological revolution, and I agree with the likes of Wells Fargo and some of these massive corporates and institutions that say that, this is the internet of value. We've gone from the internet of things to the internet of value. And crypto is, and this is Wells Fargo's, the third largest bank in America's own words, as revolutionary as some of the technological revolutions that have come before it, whether that be the motoring industry. Wells Fargo even mentioned electricity. Not so sure about that, but it is definitely absolutely revolutionary. So let's kick things off with a few comments from Jerome Powell. Let's take a look at what took place yesterday. Let's take a look at how markets reacted. And then I want to share something from Danielle D. Martini Booth. She is going to be on the 11th of the 11th, so that's the 11th day of this month. The Market Sniper has put together an 11-hour sort of marathon of speakers, and she's going to be speaking there. It's going to be well worth a watch, so make sure you guys are tuned in for that. Sniper's a very worthy guy to follow. And of course, then we'll take a little look at the markets and other things. So let's just start things off by looking at Jerome Powell's comments. They might as well have just not bothered with a speech here and just played the prior one, because he's just consistently reiterating the same thing. And this is where my lack of understanding for people being so bullish has come from. Even if the markets rally, it's not going to be sustained, in my opinion, just like the rallies that we've had thus far haven't been sustained, because of the sort of context of the situation and liquidity that we're in. And we've been showing you this consistently and continuously. And in actual fact, I'd argue that down here, you're in a worse position than you are here in terms of monetary conditions. Here, they weren't talking about 75 basis points every month and continuing as harshly as they are. They are now, and we're at a lower price, and people go, and this is a trap that people often fall into. They'll go, okay, well, surely we're in a better position when we're 70% down than we were when we were 30% down. There's less far to fall, but you always go from 100% from where you are. Just because you're 70% down doesn't mean there's only 30% to fall. There's still 100% to fall from wherever you are. I'm not calling for that. We don't believe that, this industry's here to stay. There's no doubt about it. I just think that there's further pain to be had across the board. It's not crypto specific, and you need to pay attention to that and adjust accordingly. So let's just play this. Let's talk about it. And then let's get into a few other things like inflation, what inflation may be in October. The forecast is coming in at 8.1. And then look at some of the job losses. We spoke about jobs and how there's a correlation between highs in the stock market and unemployment, and how that's likely to invert and start, you're going to start to see unemployment tick up, and you're going to start to see the stock market come continuously down. Where unemployment is currently is usually where it is when the stock market is at an all-time high. And if you look at over valuation for stocks and a number of other things, it all makes sense. It's a very, very dull tone that I have. But at the end of the day, I'm not here to get, you know, I could clickbait the hell out of my videos and I could just be massively bullish and I'm sure I'd get far more views. Not interested in that. Interested in real followers, real viewers that have a genuine interest like myself in the markets and want to do well out of them. So let's go ahead and play this.
Good afternoon. My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools that we need and the resolve it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 75 basis points, and we continue to anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we're continuing the process of significantly reducing the size of our balance sheet.
That's all we need. That's all we need, guys. All you need to know is what he said there. He is being purposely restrictive to fight inflation. You've got to remember, inflation. People are only focusing on interest rates right now. And we know that that's because they've been a very good benchmark to where markets against. We've shown you the 30-day Fed funds futures. We've showed you the euro dollars. But they're not focusing on inflation and just how bad that is, right? Inflation is just as wealth destructive, if not more, for the general public and the masses, benefits the rich. And this is why we've seen this huge wealth divide and continue to see it. And you know, I'm not going to go down that rabbit hole. But we also have interest. So there's two very negative forces here. And the Fed's mandate right now, and it's continued to be that, is we are going to bring down inflation. We're going to do that by being restrictive and essentially affecting the flow of liquidity. And this affects assets. It affects everything. And it's why we've seen the price movements that we've seen so far in markets. And that is set to continue. And that is what people continue to miss on every single pivot narrative. And a pivot, again, I just want to make sure this is absolutely clear, does not mean a stopping of interest rate hikes. It means a reduction in interest rate hikes, which allows the capital that has to go back to reservice that debt to flow elsewhere. It's that simple. It's all about the flow of money, ladies and gentlemen. This is the game of investing. Very, very simply, you want to be in the asset that the money is going to flow towards. Right now, the asset that's going to have money flowing into it is going to be debt out of necessity and the repayment of fixed instruments. All we need to know as investors, forget your moon boys, forget your moon Vember, you know, plan B, individuals. Just focus on, that's not a criticism of plan B. He actually, his stock to flow did very, very well up until it didn't. And that goes for most models out there. They work until they don't. The Bitcoin, and we've actually got it pinned to our Twitter, and I'll show you after we've read Daniel DiMartini's tweet. The Bitcoin logarithmic chart. Way back when we were at that sort of 44K mark, we said, okay, you lose this halfway mark, you're going down. We're now below it. We're now smashed below the 200 moving average, which has held us historically. Well, historically, there's a totally different context to the markets right now than Bitcoin has seen in its entire lifetime. You know, look at what the money supply's done. Again, I'm going to continue to show this because it's important. It's what drives the markets. You understand this game. You understand how this works. Look at what the money supply's done throughout Bitcoin's entire history. And it's had boom and busts, but that's to do with the 4-year cycle theory. It's never had this. And you're bullish. Why? Maybe I'm wrong. Maybe I'm too over bearish. And by the way, guys, I am no fortune teller. I am absolutely going to get things wrong. There is no doubt about that in my mind. I get, from a day trading point of view, we get lots of things wrong. But we have management to counteract that. You know, we're not going to get everything right, but, and I'm not here saying that I'm right about everything. What I am here to say is that I think I have a very good context and understanding of the situation that we're in and the fact that it's not over yet. It's not, there's no pivot in sight. And Jerome Powell just put that body back in the coffin. And I understand it's popular to be bullish. And the time to be bullish, and believe me, I cannot wait for that time, isn't too far away, but it's not here yet. And again, it's all about us right now preserving our capital, and making sure that you guys are safe. Peloton shares fall more than 20% after company offers weak holiday quarter outlook. We're seeing now companies, and we spoke about companies, how they're a big deal. We said, look, company earnings are probably going to be reflective of GDP. GDP came down. Some companies are going to do well, of course. Apple did quite well considering. Look what happened to Meta. Look what happened to Amazon, you know, and so on and so forth. Look at what's happening to Peloton right now. This is the environment that we're in. And it's because there's less money flowing to these places, more money going into other asset classes, or it doesn't have to be asset classes, it could be elsewhere. Commodity market, for example, because of inflation, and now the debt markets. This is set to continue. All you need to know, period. And that's it. That's as simple as it is. So the Fed approves a 0.75% point hike to take rates to the highest since 2008 and hints at change in policy ahead. So, of course, you know, they're not going to be able to keep going forever. I'd argue that they're basically having to choose between systemic debt failure and, you know, hyperinflation. They're choosing to walk down the path of, you know, in my opinion, systemic debt failure. I think that's what we're leading to. I think that's what the yield curve's essentially predicting. We're not there yet. It doesn't have to happen, but that is a serious risk that I don't think people are taking account for. But even in regards to, you know, just the situation we're in, it's a real bleak one. Let's do a little bit of TA, and then we'll wrap this video up. Like I say, I'm currently on holiday. So this was yesterday's price action. Why we don't trade, or we do trade, but typically we try and avoid trading these events. Because if you use any kind of leverage, and we don't typically go over anything, you know, 3, potentially 4x leverage. If you were trading altcoins, you know, they had some insane moves yesterday and having some insane moves today. It's just very hard to trade, but I think this is going to continue to the downside. And I think people will basically bid this up on a risk to reward basis. I was going to say maybe you got some sort of falling wedge taking place there. But I don't think you do. I think this looks more like, to me, that sort of bouncing ball that's losing momentum. You know, and you potentially do something like that. You're going to have to forgive me. My drawers aren't going to be great because I'm currently on a laptop in a hotel lobby at the moment. So I'm quite thankful that it's quiet right now. But, you know, this area of liquidity below us, once that gets taken, it's good night, Irene, in my opinion. You're coming straight to the underbelly. And I think I'm relatively confident that Bitcoin's going to see 13K. I'm certainly positioned like that. Could I be wrong? Absolutely, I could. You know, we've already said we don't get everything right. But we called this spill here. We called the one up here. And we're calling for another one. And I think it's a matter of when, not if, in my opinion. Could we be wrong? Absolutely. You know, is there some sort of catalyst? Let's say the Federal Reserve, for example, came out tomorrow and started to undo interest rate hikes. And we'd see that in the 30-day Fed Fund futures and a number of other things. Then we'd flip bullish. As it stands right now, the dollar is reasserting. Gold is down. FTSE's down. UK futures are down. Let's take a look at the Asian markets. Down. And the dollar is actually having a really nice day. Potentially, you know, we'll see what happens here. You could get some sort of resistance and some sort of a 3 impulsive wave falling wedge. And we did speak about the fact that it looked like the dollar was potentially in a falling wedge with the ES potentially in a rising wedge. And let's actually bring up our rates. Did we leave those draws on? Yes, we did. Look at this. We drew this yesterday, guys. You don't get analysis like this on any, I wouldn't say any, but most other crypto channels out there because they're not market technicians. I'm striving to be exactly that, a market technician, a market connoisseur, and you know, a genuine trader, somebody that trades for a living. And this is how I make my money, guys. And this is the sort of content that you get on this channel. You know, real, genuine, honest. We don't get everything right. We try and stay on the side of being right. We're not fussed about getting everything right. We're fussed about making money, and that's all that matters to me. That's all I've got for you, and keeping you guys safe, I should say. That's really all I've got for you. Let's take a look at this very quickly before I wrap things up. We're beginning to see more job cut activity in Q4. Warns that's historically when the bulk of cuts occur as companies finalize budgets and plans. Many companies are anticipating downturn, more cuts on the way in 2023. Auto layoffs lead at which is 182% up. So we looked with a sniper ages ago, the correlation between the stock market and unemployment rate and how that's about to turn. And if we were to go and make a next leg and we were going to enter a new bull market, you need to see unemployment continue to drop, even though it's at historical low levels. That wasn't very likely. And this is the thing, it's a numbers game. We're betting on the probabilities here, and the probabilities are stacked on further pain, in my opinion. All I've got for you in this video, guys. You enjoyed the content, like, always appreciate it as a comment. If you guys want to check out my Patreon, there's a link in the description. I'm going to love and leave you. See you in the next YouTube video. Thanks a lot for watching, guys.